in my nature being. I'm sort of like, nothing is making sense in my awkward mind. Give me your ears to let me feel the night. Shooting in the dark, yes, I never saw the light. Remote access, I'm running it back, yes. Missing opportunities, I wish I was that pressed. Yeah, I say that shit with my damn chest. You need me and you feel the loss of my absence. The novelty wears off after a few years, after a few tears, from challenging new fears. Learning everything I didn't on the come up. You was too busy making music till the sun up. Every day through the summer, didn't learn the business and now I'm ducking for cover. What a fuck up, might just leave a bad taste thinking I'm a sucker. Come up on my damn face, nigga, did I stutter? It's gonna be a sad case if you see my brothers. I can see how an artist can get tainted, frustrated. They don't care if your mental is on the brink and something dark as long as you're cutting somebody's place fit and sending their kids to private school in a spaceship. Yeah, I refuse to be on a spaceship. Give me you and my masters, the lower your wages. What I'm bringing to the table is more than a feast for the belly of the beast. Didn't know I'm dropping something heavy for the streets. Fuck the politics, I'm going Megan on uniques. I need the best seats in the house when the truth unfolds. It's gonna be one hell of a scene. Harry listening from heaven on repeat. He was back in it when nobody believed. Play the game is what they scream. You can play the game, I don't see the need, no. You're so alive. I know the same time. God sent me you as an angel.
All right. What's good, guys? Thank you for joining back. I know it might be a stress and a struggle, but I appreciate you for doing that for me. Okay. So there are questions here, so I'll just answer your questions first and then I'll go ahead because there's still some things that I can show you here as well. There's still some other things that happened here, like stacks. I just want to show you how to get stacks, because stacks are nice. Okay, someone said, how can someone have gotten a lower time frame entry in an example for those trading a small accounts? I can't risk a lot. That's a 30 pip stop loss for over, that's like so much that that's not a problem for a small account, to be honest. I don't think that's like, so this is the thing. Most people, in fact, human beings, we like when you get to the idea of refining, then it becomes a habit, and then you want to keep refining, and that could be a problem. That's something I actually learned myself, because as much as you don't want to risk so much, you actually have to risk accordingly to what you are meant to. That is, you have to risk exactly what you see on the trade. You have to risk exactly what that POI gives you, not what you want. All right, not and because if you try to do what you want all the time, you would miss so many trades. You would not take so many trades. So it's like, do exactly how you see it, and then prepare your risk management based on that, based on how how the system provides entry. So try not to refine too much. You see, the highest I did was 1 hour. I actually don't go below the 1 hour because you don't have to over refine, because that the moment you go beyond the 1 hour, it becomes a low probability trade, in fact. So there's a question here. Another question says, please, can you change the colors of a rectangle you use the marking out so that I can see clearly? Okay. All right. Sorry. Just keep it bolder. Yes. Okay, so like I said, there's still something here that I want to show you guys. Stacks. And again, it's still the same understanding of structure. Structure rules everything. Structure rules everything. So what you have here is this right here is a reaction into a previous control supply zone. Remember, we are selling. So this becomes a hedge for supply. Simple. It becomes a hedge buy for supply. And what happens next is price comes all the way up here. I don't want to read too much into this, but what I want to take from this, because I can't really see anything. So that again is liquidity right there. So when something does not make sense, that's liquidity. That's not for you to crack your head so much about. That's liquidity. So since I have that liquidity, although I do see two things, the fact that this control supply area has now been broken. It's no longer intact. It's no longer used as a hedge zone. So that just tells me that I should take it out. And now I understand that based on that, that is the lower time frame structure, in the sense that this is B and then this is A, because A as well has shown me a sweep of liquidity and has shown me a breakage structure. Remember, I said those are the two things you need to know to identify that is true structure point. And so what you get here is a range and an impulse. It really is that simple. Price comes to the range. And what happens? Price creates continuous structure. That's A, and A exits is at B. You do it again. In this case, what you have is you have first control supply, and then you have the second control supply. All right, you see the range, it leads clean momentum. And what you get is price reacting to the second control supply, a continuous structure. Exit. You see right there, and this becomes stack entries. But it really is that simple. So you stack until you get exit of B, and that's it. You take full advantage of your understanding of the trade, and you make full profit just because you understand and know what you're doing. And that is, ladies and gentlemen, structure reading. Okay. So the next thing that I want to talk about is control supply and control demand. That is actually the next thing on the menu, the next thing on the schedule, because, and it looks like I've actually spoken about it already, but let me just dig just slightly a little deep into it. So you have, I always like to see the charts. I always like to see the charts as, you know, somewhat a playing field. I like to see it as, so I don't know if you guys play football or soccer, or watch soccer, sorry, not play, watch, you know, and oftentimes you would see that price goes from post to post, even hockey, ice hockey, whatever the case is, any ball sport basically, right? It's played from post to post, in the sense that, you know, you go here, you score here, you go back and you score there. So to me, I like to see that as structure. So structure for me moves from post to post, but what makes that structure, you know, move from point to point is the control supply and the control demand. And also there are key things that also make control supply and control demand what they are, because I don't just look for anyone. It's the inter switch, it's the exchange, you know, at the lowest points of structures, at the lowest and highest points of structures, and then I sometimes in the middle. And what that means is this is the key post. And that would be the A structure and the B structure, and that's the BCD and the ACS, you know, and that's the first control supply and the first control demand, and that's A and that's B. Now, remember what I said, BCS and B and ACS. So when you find out that you have your A and then your CS match, that's when you can trust that that is your entry point. When you have your Bs and your CDs match, like you see that they are the same, all right? You see the first, so it's CD1. So I call it CD1 or CD2 or CS1 or CS2. That's what you sometimes see on my charts. That just explains control supply and control demand. First control supply, second control supply, all that shit. So it's really like that, you know, and then in the middle you have, it's like they share it, you know, it could go each way. So you have the second control supply or the second control demand, if it's a bullish market or a bearish market. So someone said I should analyze the current market. So let me use that. Let me do that. So it makes sense. And you see how I use, you know, control supply, control demand on the daily. So remember how I read structure before was I look at the 3 previous structure points, right? So because what I write here in the daily, and I'm trying to deal with now. But before we get there, let's understand that I'm also looking at where my price is going to react for my hedge zone. So simple, this is the previous structure points, B to A, and that's actually all I need, ladies and gentlemen. So what I look out for is I look out for the first control supply and the control demand that had the switch, and it's right there. And then I look out for the same thing at the buys, you know, and it's right there. So this for me is liquidity. This is not going to be a thing, although maybe it might. I have to look gently at it. I have to look carefully at it because it's very important. And then what I do next is I now understand that one of them is going to be my head zone. So if one of them is going to be my head zone, then I have to look at for which one is currently in control, which control demand is currently in control. Okay, maybe I need to do this clean and neat with details for you guys. So it's simple. All right, let's do this. So this right here is B. By the way, can you guys still see my charts, right? You guys can see my charts, correct? Okay. All right. So I just want to mark this up for you and just show you simply how I would arrive to my entry and my exit. So starting from the lowest point here, this becomes B. Then this becomes my A. Okay. Someone said sound was worse. Is this the same thing for you guys? Maybe it's the person's problem. Okay. And then that becomes A. And then structure gets broken right here. And when structure got broken, you can see that something doesn't make sense. And then that becomes the liquidity for price to take out. So what you get, because that is liquidity, then that means that our control supply would be here. The second control supply would be here, because that is the next range that created momentum. And then just before that was created, we have others are saying it's fine. Okay, so I'll go on. So what you have next up here, you have a range. Maybe I'll just mark this up. You have a range right there. And so I really just keep it simple like that. So this right here, you have the first control supply. And then you have the second control supply. So one of them is going to be your entry zone. I remember what I said. I don't really have to wait for it. I can just go ahead and set limit if the risk to reward is worth it. So already, what can you guys see? Already, you can see your price has tapped the first control supply. And if you had your entry here, stop loss here, you would be in profit. Really that simple. But I personally will not do it like that anyway, because of the fact that this from here to here is 100 pip stop loss. So I wouldn't do it like that. So what I do is I go into the 1 hour time frame to refine, and I keep it simple as well. I'm also actually not done, because I'm meant to do same thing for the current control demand. So since I'm finding for sells, I also have to look for buys. I have to look for the opposite player, because that's how price moves. They move based on players, buyers and sellers, control supply, control demand. So in the control supply, I just have to pay attention to the details and figure out its figure. And right here, all I need to see, what I can see is the fact that this area from here is just pure liquidity, because this didn't react into anything that makes sense. And order flow right here is all mitigated. So that becomes my simple entry point. And now risk has been managed. And that's from 1951 to 1955. That's about a 40 pip zone. And that's just that. Then right here, I have two things. I have this one right here. That's my limit. I could just go ahead. Here you have a 50 pip stop loss. So you could do two trades. Entry here, stop loss at the middle. Another entry here, stop loss at the high. Simple. and that would, that just makes your risk to reward worth it. And then the next one here would be this one here, because here you have a rally kind of like manipulation, but this mix up the idea of break of structure and break of control demand in the opposite direction. So here, this was the control demand zone, because you can see price came back into it and went up. But this is also another control demand pushing price up, and then this is the control supply breaking control demand completely. And so that is where that's where the next power is. It's simple. It's just a switch of power. And that's the range, and that's its impulse. And that becomes my also potential sell points. So from the daily to the 1 hour, I now have my entry points. And I could just go ahead and set all my limits. And I'll bank one of them, at least it's going to work out. And really, it's that simple. One of them is going to work out, it's going to be worth it. So I can take this out, and these are my entries. And take this out, and those are my entries. Which one is that? Yeah, this line. Yeah, so you have 2 trades here. You have another 2 trades here. You have 2 trades here, and I think I took this out. Yeah, so you have 2 trades here and 1 trade here. So that's about 3 trades. And now I know that price is still going to buy. So if price is still going to buy, then it's about looking for the next thing. Where's the control demand continuation? How's price going to continue itself? So what you have is, I'm not going to do it randomly, because if you do things random, then you've made the first mistake. So right here, I had a reaction into a zone that swept liquidity. So it's minor structure. So there's a reaction here, and that reaction continued and pushed price to the downside. So what I want to get is, I want to look out for the range that broke the order flow of this zone. And when I can find that range, and the range is right there. So for me, I know that the range is right there, simply because of the fact that if you go into, let's say, the 15-hour, for example, you would see the rally base rally clearly. Let's try the 8-hour as well. If you go into the lower time frame, you can see the range and the impulse, and then you can see that price came into the range, and that was the result. That's why price went up, So we call it wick to wick, and then that becomes the control demand. So if that's the control demand, then I've already identified 1 hour structure in that case. So by doing so, I've already identified structure in the sense that if this is a control demand and price came to control demand, then the previous zone just before it was broken was structure. And that means this is structure, which is going to be B. And then that right there could be A, or is A. So it means that price can come back into this control demand. Potentially, I look at Tokyo sessions as liquidity zones, potentially to sweep this liquidity, still reacting to the control demand, and probably still buy back up. So you could have a plan like that. And I could anticipate something like this. To happen. That's how I do it. And that way you cut out all the noise of, also, it also says that price can buy from here, but I will not bank on it, because I like to do the ones at the edge of structure. I don't really like to play the middle game. I only play the middle game on a higher time frame, but I won't play the middle game. I will never take the second control supply or the second control demand in the middle of structure. I will only take it from the edges of structure. Okay, and so the only one here, obviously this order flow right here, which is the control supply, was not mitigated. So that tells you that this is liquidity. So that also tells you that if price breaks this structure here, because you already have a liquidity graph, if price breaks the structure here, there could be a potential for price to sell back down to sweep this liquidity, and then potential continuation to the upside. So that's really how I do it. It's about understanding your drivers, is I start understanding the drivers from the higher time frame and then breaking it down to the lower time frame. It really is that simple. Let me use an example of what happened maybe 2 weeks ago or 3 weeks ago as well to explain. So also here you had the previous A and here you had the previous B. So the reason why I'm doing this is because I want you to understand that just as structure was broken right there, something happened. And you have to also identify the range. So this everywhere around here is the control supply. As you can see, it was not mitigated, which is why you could get a reaction from here. But price was not having that. Gold was not having that. Gold was like, nah, I'm going to continue bullish, right? But the devil's in the detail in the sense that when you see that that was broken, what was the range created to continue upwards? It was that range right there. And so because that range right there was created, what happens next? There's a transfer and that range continues out of flow and price action. That is the idea of this being control supply, CS1, all right, and being a potential zone for entry, nevertheless, because structure is bearish, right? But then you see that it's been broken, which then gives you the idea that this shows you a sign of weakness in supply and now a sign of strength in demand. That's what it means. So it's like if this control demand, you can see the evidence. You can see it also tried to react order flow, came to demand, but this demand was strong enough to continue price action. And then price continued up here and continued forward. So when you see this, you now have an identification of structure. You can go into the 1 hour time frame. And just mark out the structure point. Simple. And I want you guys to also see how price moved according to the objectives of structure here. So this is the control demand, the new control demand in charge. And now our structure is very clear. So you have A, you also now have B. And now what happens? B made a retracement to sweep liquidity, which I told you earlier that that's the objective of retracement, is to come back, sweep liquidity and react into what's unmitigated. Okay. Maybe according to them in their books, I think, yeah, something was unmitigated here. You can even see right there, guys. Something was unmitigated there. Do you see that wick to wick right there? It was unmitigated, and what you see is price coming to that zone, sweeps liquidity because this didn't react. So it's coming back to change and correct it, and then that continues structure. And if I saw break a structure, for example, I can see that this supply was broken here and give me more reason to buy from a control demand. You see it? It is not a coincidence. Control supply, control demand, these are the players of the game. You have your A, you have your potential sign of weakness, which is your confirmation of more buys. What happens here is price bought, price went up, but because of Tokyo liquidity, I think price came back to sweep Tokyo liquidity or something. And then react also into the control demand and then still continue upwards. That's again the new structural point. And you can just follow and read the structure. And what happens next? So if this is continuation, what happens next is price comes for what's unmitigated and comes to sweep liquidity, which is, what did not make sense. There's still something here. It comes to correct it. As soon as it corrects it, it taps into it. You have your sign that it's ready when you see this range area break. In fact, everything here was broken. And then what happens next? Price uses the nearest control demand as potential continuation to the upside. And you see happen over and over and over and over again. As long as you read structure, you see happen over and over again. That's B. This is now the new structural point, and this is A. What happens next? Price returns back to sweep liquidity. And when it swept liquidity, reacting to the control demand zone. Probably not the best time frame to view it. Maybe 4 hour time frame is a whole lot better than 1 hour time frame. Sometimes these are the cases. For example, you check the 4 hour time frame and you get what I'm saying. Yeah, there you go. There you go. On the 4 hour time frame, it's very, very obvious that that is the base. You don't have to think too much. So higher time frames, like I said, It's so much better when you're marking out things on the higher time frame. Look at the bases are so glaring. You don't have to. On the 1 hour, it could look different. The 1 hour probably should only be used for refinements. You get what I'm saying? Here, it would have been also easier to see that that's the range that was not mitigated, on the 4 hour time frame. So higher time frame is key. Higher time frame is very important. It's going to help you guys. It's going to help you out to read structure and understand structure. And you could keep going on and on and on, and you keep on seeing how, no, that's not structure, this is structure. How price creates structure based on the first control supply. Now, this right here, the reason why this is an entry point is because this is the second control supply, because this is the range that was created to break structure. Right here, this is the range of order flow. Nothing is unmitigated. Price comes to mitigate sweep liquidity, make sure everything's correct. Simple. Really is that simple. And yeah, you can keep on going on and on and on. And that really is how I read price action, pretty much easy. So the third thing on the schedule is effects of timing, and that is understanding, when's the right time to take a trade, when's the right time for your limits to get set. So I actually have just used an indicator here, just for New York session, which I only look at on the 1 hour time frame as well. It's the purpled line physically. So majority of the best trades that you ever get, especially gold, I don't know about any other pair, is from New York session, because that's when the most volume is being traded. So for example, look at that control demand and look at exactly how the only time price came into that control demand was in New York session in 3 days. And this also goes to show you why patience is key, why you probably will not be trading every day as well. You'll be trading only on specific days because of how control supply, control demand is mapped out on the charts. Really is based on that. And then look at again, structure points in 2 days, price is New York session, unmitigated zone, mitigation into previously unmitigated New York session. Very simple, straightforward. You already know, you go here, set your limits, the risk to reward would be worth it. Look at that. Especially when you understand your daily picture. You know where price is headed in the big picture. Same thing here, New York session. Same thing here, New York session. I don't even need to continue. You guys see it, you guys can see for yourself. And that's why I just like, that's the effect of timing for me. It's just about New York session, really. Same thing here, this zone, this control demand is currently, the order flow, as you might say, is currently being held by New York session. And you can see how in New York session, price created a new range and maybe price might go down. You could go into the 1 minute like you guys do, and you can read the structure and you can kind of understand how to get into a trade. But I don't do that anyway. I don't do it because the moment you start going to the 1 minute time frame, things become tricky. But I don't chase the market. I like to take it from A to B and from B to liquidity. That's what I like to do. So that really is the effect of timing for me. I just use New York session and 1 hour time frame just shows it and exposes it. And yeah, I think that really is it. So the next thing I'm going to talk of is true risk for reward. So like I said earlier, there are ways to refine so you can get the true risk to reward in the sense that if your zone is 60 pips, so I have a rule. If my zone is 60 pips, I only trade the 50%. That's I take my entry in 50%. And if it's less than that, then I can take my trade from the open. Like for example, this trade right here, this one right here is about 40%, 40 pips, sorry. So if it's about 40 pips, then I probably would maybe just slightly take my entry from 10 pips upwards and put my stop loss up there, something like that. Just so I don't go more than 30 pips stop loss, just because I look forward to 300 pips and more. That would give me a 1 to 10 risk to reward. And sometimes if I use 0.5% risk per trade, I'm getting 5% out of that trade. If I use less, I'm getting 2.5% or 3.3% of that trade. On every 300 pips, I'm getting 5%, at least, something like that. And that's how I do it. And also opportunities for stacks come into play, and I read it. So the thing about this is the moment, because you must always have a control supply and control demand in play. at all times. And that's exactly what I have here. I have a control supply, and I also have a control supply. So you can literally see that this is a control supply to a control supply. That tells you that you have a playing field. So I must always have a playing field at all times. When the playing field is broken, then a new playing field is created. And that's how I do it. It changes when it's broken because it can be broken and you can lose. Price can decide to break it, but before price breaks it, it creates a new range. It creates a reason to break it. So that would give you understanding of normal losses because you're going to have normal losses. And normal losses are going to come into play when you go ahead, you set a limit for CS that is actually correct, but it ends up not working. It doesn't mean that what you're doing is wrong. It just simply means that that's a normal loss because price just wants to break that zone. It really is how it happens, and that's like the understanding of the psychology behind when this does not work for you. You just have to understand that a new reason was created for it to not work, except what you actually drew was wrong, except you probably drew rubbish to start with. Then you probably have to go back and look at maybe what is recording again to understand what I mean by control supply, control demand. Of course, you're not going to get it here in just one call. You take time and time of practice and time of understanding. But for me, this is the gameplay. This is how I look at the markets. This is how I read the charts, and this is how I try to put everything together, put 2 and 2 together, if that makes sense. And yeah, I try to keep it simple. So from now, in the next 5 minutes, I probably will just answer questions. Any questions that you guys may have. So do you guys have any questions? Did this make sense? Was this interesting? By the way, today is Friday, so I don't really anticipate much happening today. Then you can imagine next week buying from the next control demand. You have to think about that. And then that buy comes in here and goes back up again. And then we're going to start having friction from what smart traders call an order block, which really is just control supply and control demand. Out of context, do you meditate? Yeah, I do. A lot of times, I do a lot actually. Will you be doing another public section? Yeah, I will. I'm doing another one. It all just comes based on, whatever I have to give or whatever I have to offer to you guys, it all just depends on when I feel like, yes, I have something to give, so I look forward to that as well. But really, it doesn't get better than this, to be honest. Do you give risk in percentage in every trade? So, okay, you give risk in percentage in every trade. How do you determine percentage risk according to your conviction? Okay, so if it's the second control supply or the second control demand, actually, that's a very good question. If it's the second control demand and second control, so if it's the second and that's like the one in the middle, then that's when I go lower risk. But if it's the edge, then that's when I sometimes even go 1%. It all just depends on, is it the edge or am I in the middle? What's the criteria for selecting CS and C zones? The criteria are liquidity grab and structure change. How do you anticipate your true swing? Either swing high or swing low. It's just using the structure, like I said from the very beginning. It's understanding the structure. It's the structure that enables me to know what I'm doing. So in this case, the previous structure in this time frame would be, this is one low, this is another high, and this is another low. So in this case, I'm in a bearish market. You get me? So that means that this is A, this is B, and so B is going somewhere. So where is B going? B is going to sweep out liquidity, which is already did like last week, I think. It just happened last week. So the liquidity was just swept last week. So now it's like, are we going to get this next A order flow from any of these zones? Since that's where control supply is lying. Are we going to get A to sweep out B? That's the question. Or, are we going to get A to come back to B edge and then buy again, because there's an imbalance here and price will come back for it. Price is not just going to leave it. So this becomes liquidity. And so if I take a sell here, this is my exits and my targets. That's how I do it. I use structure. Structure is what makes me understand my direction. Like I said, it's my compass. From your screenshots on Telegram, you make use of the 15-minute time frame. How do you not get distracted from the high time frame? I do get lost. When I'm on the 15-minute anyways, it's just to refine. Maybe the 1 hour is not making sense. Maybe the 1 hour point of interest, maybe the 1 hour range is maybe too big. And then I go into the 15-minute just to reduce it. That's the only reason. I would use that same zone, but just reduce it. Just look for something unmitigated within. That's the only reason. It's not like I look for something entirely different. I just do it because of risk, because of the peep range. You know, that's why. That should actually be the only reason. You're not. So it's like it's crazy when you already have a time frame. You already have a time frame on like the 1 hour, and then you go into the 15 minutes, and then you go into the 5 minute. And that's like you creating new time frame, new points of interest entirely. What do you think about prop firms for a trader? Okay, so in the past, I was actually against prop firms. I used to be the kind of person that I used to be against prop firms. But now I am actually for prop firms, in the sense that it's all about your risk management. I feel like risk management, of course, your system. But for that, especially for someone like me who trades long-term trades, you know, I am a swing trader. So it's like sometimes my trades, maybe, well, I guess I'm meant to actually always get more than 10% a month. Anyway, I'm meant to, based on the system, I think, and I believe. But there are times when there are like low volume trades, and those low volume trades would not go more than 300 pips throughout that week. So like from the control supply to control demand for that week, it probably is not more than 200 pips. And then you just price range within that zone, you know, up and down, up and down, up and down. And maybe it does that for like 3 weeks. And that could, you know, stunt your progress. But I feel like for that, you have to understand when to increase your risk. Maybe if you have, you know, the edge of structure and you see everything intact, you can go 1%, 2% risk, just so you know, you can get that 10% or 8%, whatever they ask for quickly. So that's why I feel like now, because before for me it was the understanding of risk management, but now it's really about switching the risk that you put on the table based on the plan that you have. Really, that's just what it's about. Do you trade every day? No, I don't trade every day. In fact, there are weeks that I don't even get a trade, and what that happens when sometimes price does not react to my limits, or sometimes I delete the limits and it works out, you know, all this kind of thing. So I don't really trade every day, and I don't trade every week. Okay, so this call again has less than a minute. So what I'm going to do is I'm going to send a recording for you guys, and I'm going to wrap it up here. I'll see you next time, and also we'll drop a whole lot more for you guys as we go on. Please follow my Instagram as well. It's just simple, Capital, and you get to see a lot more information on there. Thank you guys, and I'll see you next time. Take care. Bye-bye.